So the Security and Exchange Board of India, upon examination, found that some of the exchanges, some of the members of these exchanges use a volume-based slab structure where the fees that they are charging the end clients, which are the investors and the traders, daily is much higher than what they are paying back to their market infrastructure institutions, that is the exchanges, on a monthly basis. That is why new fairness and equity-based guidelines have been introduced that are to be followed. Now, these can be seen majorly in three ways. Number one, that to ensure fairness, what is going to happen is that they have to ensure that volume-based system is going to be discredited and only a flat fee structure is going to be taken up, after which that volume and the size and the activity of the member is not going to be considered. It is going to be equal for all members. Then true to label is the second criteria, according to which the fees that is going to be charged by the exchanges is going to be the only fees that is charged on the traders and the investors by the members, no hidden or extra charges. And lastly, the current existing system of per unit charges is going to be considered so that a fair charge is being levied on the end clients, which are the traders and investors, and they will also have to potentially pay a lower fees. And finally, the market infrastructure institutions have to amend their rules and see if they have the infrastructure and the means of implementing it, and then report to the market regulator that they have implemented the same.
Yeah, this is important because it will possibly hit some of the discount brokerages for sure in a big way from a market listed perspective. But yes, Charu is right, brings down the cost presumably for end clients. Or maybe, Charu, just one quick follow-up, right? What may happen is essentially not that the brokerages may charge customers less. If anything, Angel Broking about 6-9 months ago had said that they will not get impacted because they can hike brokerage fees by 2-3 rupees in order to offset this loss of income. So it may not actually be a profit to the end client, but for now just a loss to the brokerage.
In a way, yes, it can be looked at in a way that it is a loss to the brokerage, and for the end clients it is just another thing which ensures that only a fair fee is charged on them.
Yeah, okay. Okay, Charu, thanks for putting that into perspective. Now, Nirav Asher, Head of Equity Research at Latin Manarlal Securities, with us. Before we talk about everything else under the sun, Nirav, you represent a brokerage. You're probably not a discount broker, therefore you don't get impacted as much by this, by volume targets, etc. But tell us, how does this work? Did you benefit out? I mean, your brokerage also met some volume targets and therefore were you charged less? And is this therefore a hit? Because there are various estimates that I've read this morning which say that Angel Broking for Angel One, for example, earned maybe 400 crores out of the 4,200 crore top line in FY24 from this piece alone, and that is at risk now.
Yeah, good morning and thank you for having me on your show. One thing, I think, first things first, we are not a discount broker. So we offer a whole host of services and we charge the normal rates. That is point one. And regarding this SEBI directive, which is applicable from October 1st, that market infrastructure institutions are supposed to charge a flat fee or uniform charges, which was benefiting certain discount brokers. Now, I think these new age discount brokers, they have a very aggressive strategy for growth. And to push the growth, I think they have been going in aggressively for volumes, and thus they've been availing of these discounts, which if discontinued, I think is likely to be passed on to the clients, because we know that finally it is the end client who has to bear the brunt of this. And to our mind, this can potentially impact the volumes going forward, because I think we've seen this surge in volumes, as you rightly pointed out regarding Angel. We've seen this surge in volumes. It's on the back of wafer thin margins, basically. So I would be tempted to believe that this will be passed on to the final clients, and in a way, this could potentially impact volumes going forward.
Okay, but so one is volumes, but could this reduce the YOY incremental incomes? Because if they don't get this money for 9 months now, presumably, then is that effectively killing growth on the revenue front for some of the discount brokers, Nirav, because their valuations are tied squarely to the kind of growth that they are showing in clients and in business. So therefore, is it a hit that an angel 1 or a 5 paisa might take today? Would you use that hit to buy into those stocks, or are you staying away right now?
We'd like to stay away from the stocks at least at this point of time, because we need to study the potential impacts of this. But definitely it affects everyone across the chain, because when you are charging uniform charges, a flat fee structure, the volumes are going to be hit. So in that way, from that perspective, the business is going to be impacted. And as far as the end clients are concerned, for them also the cost structure tends to go up. So they would be definitely less aggressive as far as the trading, etc., is concerned. So I think it could potentially disrupt the industry in a few ways.